Welcome back. Well, when it comes to lending, a trend is beginning to emerge that could be worrying for the SME space. It's been widely reported that the big four banks are shying away from lending to small businesses and favouring retail customers. According to our next guest, unless SMEs focus on building a stronger relationship with their lenders and begin to present themselves as lower risk, they will be viewed as a less secure lending partner. Well, for more, we're joined now by Chris Gebhardt, Business Advisory Director at William Buck. Chris, great to have your company right now. Why are banks then favouring retail customers over SMEs?
Yeah, hi Ingrid. It seems that the trend with the banks at the moment is to go for what's most secure and what's providing the strongest return for them. And at this particular point in time, it seems that resi markets and residential lending is that way to go.
Are SMEs though less secure?
I think what's going on in the market at the moment with SME business is that they're not presenting themselves in the best possible way that they can, and as a result of that, the banks are seeing them as a less secure proposition in terms of funding. A bit of that comes from the Murray inquiry and the proposal about information asymmetry, whereby the lender doesn't have the same levels of information that the borrower does have, and therefore there's a miscommunication around what should be provided and what's required to be provided.
So how can SMEs better their chances of being able to secure funding? How can they remedy this?
Ingrid, I think the biggest issue with SMEs applying for finance is they don't necessarily always present themselves as a professional outfit. The easy way is to get in front of their professional advisor and get some assistance in regards to how to put themselves in front of a lender. But there's some simple things that they need to deal with, and those simple things really are in regards to, what do they need the money for, how long they're going to use it and how they're going to repay it, and effectively give some idea about the business in which they're operating and the profitability, which of course provides the cash flow and the ability to repay the bank in the first instance.
So is it really just communicating with your lender?
Very much so, very much so. And I seem to find nowadays that banks are shying away with the resources that they have available for their staffing and their lenders. So the time that lenders have to spend with their clients seems to be diminishing. And of course, with the borrowers' view on lenders, they don't tend to see them in the best light. Hence, they often are a little shy in terms of delivering all of the information that perhaps is required for a proper information download.
So is this just in terms of the big four banks? What about smaller lenders?
Small lenders typically, Ingrid, are a little more lax in terms of lending proposition, but of course, because they don't have the cash flow backing of the big four or the bigger size banks, effectively their rates are higher. Their perhaps information covenants are a lot stricter, and of course their timeframes might not be as long either. So it presents a higher cost of doing business for the SME, and of course in these tight times and a tough economic environment, the SME should be looking for the cheapest form of finance possible. So that may well just mean that they need to open up the information asymmetry with the big four or the larger banks to enable that to happen.
What about in terms of when interest rates start to rise, and mortgage lending eases a little? Will that help the SMEs be able to secure funding a little easier?
Look, I'm not sure that would be the case, Ingrid. Rising interest rates, of course, means that the same size debt requires a longer time frame to be repaid. Of course, that puts further cash flow pressure on an SME to deliver that funding back to the bank. So higher interest rates, a bit of a danger sign for small to medium enterprise. I think at the moment businesses in this low interest rate environment are coasting along very well. The ability to get finance is probably easier, and particularly with fixed rates being the lowest they have been for a decade, then it's a great time for SMEs to get their bundle of papers together and roll into their lender and have a decent chat.
All right, Chris Gebhardt from William Buck, thanks so much for joining us today.
Thanks, Ingrid.